Municipal bonds right now actually having their best month in almost 4 decades, a sign that some of those inflation pressures are easing. State and local debt outperforming corporate bonds, and that strong performance, a lot of folks think it's going to continue into December. Eric Kazatsky is our senior U.S. municipal strategist over at Bloomberg Intelligence, joining us right now. And Eric, I was looking at the trajectory that we've seen in muni bonds this year. Of course, it wasn't a great start and some pretty significant losses, but we've had an interesting rally on our hands over the last, 6 weeks or so. What's happening?
Well, I mean, Romaine, you basically have a story of supply and demand that's playing into the end of the year. And, it really has helped munis that treasuries have been rallying. We sort of tend to lag a little bit. We're doing so, but sort of following with a lot of strength based on the fact that we don't have any primary supply to really feed the demand that you're seeing in the municipal space. And we're outperforming corporates and treasuries by hundreds of basis points. So you're down 9.5% this year. Not a great story to investors, but you're outperforming by hundreds of basis points alternatives.
Mm-hmm. So, Eric, with that in mind, if you expect munis to continue to rally here, is that really just a call that we're really not going to see much issuance from here?
I think that's actually spot on. So, for instance, right, we have $32 billion coming back to investors in December, and there's basically no primary supply. All that money is going to look to find a home back in the municipal space and just create this abnormal demand story.
All right, so let's talk to us a little bit here about the various areas in this market. We talk about investment grade, and we see some of the cities and some of the municipalities that were below investment grade. Which ones have been outperforming?
Well, you really have Illinois coming from behind with some surprise upgrades this year, as well as Chicago.
State, by the way, yeah. Go ahead.
There you go. So you baited me with that one. Look, I think for a while investors have been, pretty high on the story there. Grabbing all that excess yield and excess spread, just knowing that historical defaults in the space are really low, and they don't happen very often. The last large one we could point to, Detroit, and then Puerto Rico after that. So there's a comfort there that investment grade really is on par with really high rated bonds in the corporate space, and investors are latching onto that story. Recently we've had a bankruptcy right near Philadelphia in Chester, but the impact on the municipal market, very, very small.
That's kind of a question I always have about munis. To your point that, historical defaults are extremely, extremely low. Why wouldn't you always just buy high-yield junk munis?
Yep. I think that's a great question. But unfortunately, what we saw during the pandemic is that not all high-yield munis are built the same. One of the areas of high-yield munis is CCRCs, or senior living centers. And unfortunately, they've been one of the biggest areas of defaults we've seen over the last 2 years. And in 2022, they continue to sort of lead the space in defaults and bankruptcies. Until we sort of get that out of the way, and until spreads in high-yield munis really sort of normalize, I think that there's still sort of a little bit of a danger zone there for investors.